June saw a volatile trade around the globe, with emerging markets, including South Africa, remaining under pressure for most of the month. There continue to be fears about a possible trade war, but despite these concerns, the all-share index gained 2.6% in June. If we dissect that a bit, it was driven by resources rising 6.4% thanks to commodity prices remaining relatively high and undemanding valuations. Industrials rose 4.6% in June, and it was really the financials that felt the most pressure, ending the month just below 3% lower. The big individual movers in June, as we said, were the miners. BHP Billiton and Anglo American were up 7% and close to 2% respectively. Then in the industrial space, British American Tobacco was up 7%. But it was Naspers really, which is 20% of the index, that did a lot of the heavy lifting. That was up 15% for June. The rand lost significant ground, about 8% weaker. So what drove that? Well, we had a rampant dollar, negative emerging market sentiment, and weak domestic economic data. Let's just touch on that for a second. First quarter 2018 GDP was really poor. It contracted 2.2%. And to put that into context, it was the biggest quarter-on-quarter decline since the first quarter of 2009. It was the agriculture, mining, and manufacturing industries that drove that. May CPI surprised on the downside, coming in at 4.4% year-on-year, and most of that increase was due to higher alcohol, tobacco, and fuel prices. With local consumers under pressure from all fronts, April retail sales also disappointed as growth contracted 1.2% year-on-year. That's the slowest growth in 15 months, according to Bloomberg. Meanwhile, private sector credit also decelerated to 4.6% year-on-year in May, its slowest pace since September 2010. On the political front, the main talking points were expropriation of land without compensation, universal healthcare, and a revamped third mining charter that was revealed.